This video is sponsored by Bityard. With over 400 cryptocurrencies to choose from on their spot exchange, dozens of USDT pairs for futures trading, perpetual coin futures, trade commodities like gold, silver and oil, Forex, and major indices like Nasdaq. You can buy crypto from Bityard with over 50 different fiat currencies using Visa, MasterCard, Google or Apple Pay. If you like, you can use their copy trade facility, follow other traders who will execute trades on your behalf, or become a copy trader yourself. So if you want a bit of that, click the link in the description. Hello everybody, welcome back. Let's have a quick look at Bitcoin, just focus on Bitcoin for the minute. All altcoins appear to be just basically following Bitcoin's rise. So given the, well, I suppose sense of security, as in bull market on, moon targets on, 20 weekly recovered, 50 exponential recovered, even 50 simple recovered, area of significance being this resistance recovered. Everything looks pretty good, like I have to say, and it's definitely a massive change in behaviour so far. It's still early days, but we're Wednesday now, so I'd like to see further candle body closures. I'd like to see a curvature of the 20 weekly, similar to what we see on the 21 exponential, which is still good. You can see that is a relevant area, as well as the 20 weekly. So being above all these major moving averages on the weekly and on the daily, basically, it's only that 200 simple moving averages is posing a problem. Clearing that would be above all of those. We wouldn't have a perfect spread of moving averages, as effectively what the 4 hourly looks like. This is what you want to see on a daily. You want to see all of these in the right place: 200 exponential, 50 exponential, 21, 20 and 10 and 7. That's what you want to see on a daily, and that's when we get super turbo bullish to the extreme. Obviously revisiting the signal that was generated over the weekend, that Ichimoku conversion baseline cross, suggesting a continuation of a trend from this point forward. Really good signal. Everything looks really good, right? And altcoins are feeling that too. Altcoins are basically trending with the market, generally speaking. We were on the live stream last night. We recognised that a lot of these altcoins, not all of them, but a lot of them are looking particularly overheated on the money flow index, which is usually a good place to think about taking some profit. Bitcoin peaked around here about 8 and just short of 90, which historically, it's a bit of a toppy kind of vibe, but it's not the top. We always think about 95 as being a getting out type of area. If you're still in a position, or if you're leveraged, for instance, and you see a money flow index on a daily of about 95, you're looking at a bit of a temporary top. If you're seeing that on a weekly for Bitcoin, it's bubble pop time. It's bubble pop time, which is one of the main reasons that I've thought throughout this this last pullback, this last consolidation, outside of the reasons that we talk about, such as the entire economy is having a pullback as a result of inflation about to be tightened. Then we had the Megatron virus that came out in December, and then leading into the rate hikes. We didn't actually have a read like we had in the past, which is bubble pop, built a bull market top 2017. Bull market went into a bubble pop in 2019, and then in 2020, early 21, before the alt season, bubble pop. These all indicate specific tops, basically, and that like I say, it wasn't the absolute top, but it was definitely a bubble pop, and that's where the fun began for altcoins. We dealt with that appropriately, so we never got that around here, and it doesn't seem right that Bitcoin would pop or go into a bear market at this particular level. It just didn't feel right. If you want a bubble pop, if you want to get the best bang for your buck, if you want an overinflated value for what your Bitcoin's worth, you need to see a money flow index at 90 or above to really consider prolonged bear market. But things change. This is definitely a different cycle than previous, but things do change. So we can all enjoy what Bitcoin's doing right now. There's not really much question about it. It's particularly bullish. It's looking pretty good, but that is pretty high, and we were looking at, like I say, many altcoins, and some of them were a lot higher than that. Some of them weren't that high. Some of them weren't that high. The top cap coins appear to not have that kind of read, which makes me think that maybe some of these top caps actually go onto a little rally themselves. XRB being one of my favorites. But thinking about, correction, let's just say a correction. If you've been around Bitcoin for long enough, at least for the last 3 or 4 years, you would be privy to seeing big upsides and then big pullbacks, right? A lot of that is to do with that money flow index, but then on top of that, we could have a look at this, which is something I've never really brought onto the channel. I hear people talking about open interest all the time. This is basically like an overlay of the price with the open interest that takes place. Now, you can think about this on horizontal levels, right, which would suggest that we are bordering a potential area of significance where we basically roughly have support around here and big breakdowns around here, a little bit of a top around here. I'm not particularly interested. It's not really the same around here. Not really the same around here either. We're kind of reading a little bit too much into this area. I know people are talking about, oh, the open interest is high. It is high, but thinking about it in a normal way that you'd think about a chart, it's going to be difficult because what we're talking about here is people just getting too excited. If there's anything that we can go by, it would be similar to what we saw in 2019 when Bitcoin came out of its bear market and the bull market effectively began. And we went into that initial bubble pop that we've just referenced on the chart, right? And again, the money flow index on the weekly went straight up all the way to a 95 and we bubble popped. So we could be looking at the same kind of vibe that we're getting around here. I'm not saying this is the sort of gains that we're going to see from Bitcoin. I'm just thinking this is the same kind of excitement kind of vibe that we're getting right now. People seem to be effectively super bullish, and I remember obviously picking up a load of this leading into this and being almost blown away and sort of, I suppose, warning everybody, including myself, that this is a little bit more aggressive than I expected it to be, to be honest with you. Way more aggressive. A lot of that would have been to do with open interest, right? And unfortunately, going back to 2019, we don't have that information. Pain in the arse and holler. We can't really see what the open interest was and how fast it rose. So rather than going from historical levels like you would do in a normal chart, it might be more interesting to measure the open interest rise and demise, basically. So think about it from its low to its high and give you a rough idea of how much this can go up at any one time before it has a decent correction, and give us an overview of, is this too much right now, or can it go higher? Remember, open interest is basically people going long or short, basically, and we'll look at that in a minute. Again, with a crude overview. So the first time round, as far as any major significance around here, September 2020 to November 2020. So a small period when Bitcoin basically started to go into its big tear up, right? Reaching up to a bubble pop vibe, which was this one over here in January. So we saw that on the weekly money flow index. So first initial rise was 127%, and then we got a nice little pullback. You say nice little pullback. These candle bodies are a little bit deceptive, but a pullback of 27% on the open interest, right? And again, it was less of a pullback on the chart. Then we started the rise again from the bottom to the top. We rose 140% open interest before we reached the absolute bubble pop, and then it basically trickled down, not massively, but it kind of trickled down, and Bitcoin went into a bit more of a retracement of itself. But again, at the same time of all of this, we had an alt season, a massive one. So we're dealing with over hundreds of percent here, so over 100%. Again, another 100% from this bit to its all-time high. Was that the all-time high? It was around about here, wasn't it? And here, yeah. So it was around about this. This was the all-time high. So, but we also had these big peaks and troughs, didn't we? So back down again, 27%. Measured that with the price. More or less the same, from here to here before the next little pullback, 71%, and a pullback on the price action of 18, and the open interest pulled back to the tune of, again, this is rough and ready, a pretty crude, 27. And then a final big push up into April for the bubble pop that took place shortly after that in May, and then we had a big collapse. Open interest at 24.5 billion, right? Fair enough. So what we're seeing is that we do get big rises, right, and of generally over 100%, but certainly over 50. So 100% here, then a pullback, a nice big rise here, 71%, then a pullback, and then from this wick low we'll go forward to the absolute peak we're talking 60%, give or take. So we're not going to measure out absolutely all of them, but let's think about how far we've gone on the open interest since this wick low over here. So we're at 43%. So yeah, of course, everything's different. Things can change, things do change all the time. But when we talk about open interest, rather than thinking about it on a horizontal basis like you would do a chart, yeah, we're getting particularly hot, and the money flow index on the daily for Bitcoin is also particularly hot. You know, we recognise that, but it can still go higher. I know how it sounds. It can still go higher. And that's one thing we should just think about and recognize. It can still go higher before effectively on the daily has one of those big pullbacks. So we're talking, you know, from what we've seen, roughly, you know, between, well, let's just say 15 to 30% pullback, right? When things get particularly overheated and reach a particular peak. And it doesn't mean that it's going to collapse into a bear market, it just means like a big pullback. So we're talking about this on the live stream, thinking, all right, we could pull back from here, and if we did pull back, we could pull back down to this level here, we could pull back to the center of the Bollinger Band here. In fact, as far as the Itchy Cloud's status is concerned, I could even see a sustained pullback to basically 40,000 and still be intact, so long as we bounce from there pretty quickly. And we could, but that's, you know, unlikely. I'm just thinking about keeping this signal intact, and we can sustain that. That's what we were talking about over the weekend, trying to make sure that we didn't have a candle body close with this Chiku span in it. So we can obviously go higher. Now, if we consolidate from here, which is perfectly natural, perfectly normal, I would be okay with that as well. We don't have bearish divergence or anything on the daily. In fact, we go to the 4 hourly. We don't have bearish divergence on the 4 hourly. We probably will do, though, if we do go up again, and that would be a warning sign on the short-term time frames that we're looking for a pullback, consolidation, or maybe one of those dumps, right? One of those dumps we were talking about. 200 exponential often gets tagged after a golden cross. Now you could argue that that was that there, but if it wasn't, we could also be sustaining a deeper pullback to that 200 exponential, which is about 42,000, and again, still remaining bullish as far as the signal is concerned on the daily trend. So I'm not here to scare anybody about any of this. I'm just thinking, you know, when you're looking for, you know, leverage positions, whether you're long or short at this particular level, it's gonna be a difficult one, very difficult one to make any kind of particular judgment on, because, you know, one thing we can look at, and again, this is just a very, very crude basic indicator. We've got Binance basically 50-50 longs versus shorts. We've got BitMEX basically 50-50 longs versus shorts. This I don't trust. It's always like this. It always looks like this, so we don't consider that. So what we're thinking about is longs versus shorts, effectively 50-50. So somebody's going to get wrecked, aren't they? Someone's going to get wrecked. And when you think about the open interest being particularly high, but not massively high, but being particularly high, you know, somebody is going to get wrecked, because the longs and the shorts are basically facing off at this very moment in time. And of course they are. I mean, like I say, it's undecided. Like, we've got everything's in favor of bulls right now as far as charts concerned. You know, the position that we're in right now in relation to moving averages on all time frames, no bearish divergence confirmed on all time frames. Well, there might be some on the smaller term time frames, but 4 hourly and above, which should offer much larger corrections. We've not got anything like that yet. We probably will, though, on the next big leg up. So, you know, it's very difficult to call which way it's going to go in the immediate term, right? Again, you know, all aspects of the chart do point to further upside, potentially up to this 52, just around $52,000, and that could be where the bearish divergence really kicks in, and that could be the area where we have the larger pullback based on the open interest, you know, going up between 70 and 100%, or sometimes even more, and then consolidating, pulling back in a giant big move back down, you know, to what the tune of between 17 and 30-odd%. So, you know, this is looking at it in a strange light, right? In a historical, you know, way. It doesn't mean that this is how it's going to play out. I just think that when we talk about money flow indexes on dailies, you know, it's effectively telling us that, you know, if you want to do a market sell right now, you'd probably get good value for money. You know, the trading volume is pretty high. We can see that, almost 2 billion on a 24-hour trading volume. So that's what it refers to. If you want to sell, you know, you sell when the money flow index is high. Don't sell when it's low, you're not going to get good value for money. You sell when it's high, and that is high right now. But if we're talking about a massive bubble pop or anything like that, we're nowhere close. In fact, we're only just getting started, to be honest with you. Only just getting started. So it does look like the trend will continue, in my opinion, and go into a much more long, sustained upside bull market. To be honest with you, it does look like that, and that's where I'd basically put my money. Well, that's where my money's been put. You know, sold around here, didn't I? Yeah, all on the record. Sold for the in preparation for, you know, people getting scared of the Megatron virus. Took some profit, not loads, but took some, and then just gradually just put back in at 40,635,000. That's the Bitcoin spot trade for you. That's all it is. 3 trades in a single year. That's all it took. There's nothing more than that. And so now it's just a matter of letting it go back up, back up, back up, and then just, you know, it's just a very casual spot trading win, effectively. But this doesn't come without shock, and we will get shock, of course we will, and we are looking on the daily like we're looking down the barrel of a gun, waiting for that shock, similar to the open interest. Now the open interest, like I say, it's only it's less than 50% up from its low to where it is right now, so in that respect it can go higher, and people love derivatives. I've seen them piling it on. It's all there, people are piling it on, so are the longs and the shorts. So I'm just saying that there's going to be a big move still from this level, and it could be up or down. It could be up or down. The thing to be concerned about, if anything, is if you're in those altcoins which are already above 95 on the daily, and they've gone up, you know, God knows what, 30, 40, 50 or more percent. They're the ones that will get significantly hurt on the next big pullback. Most altcoins probably will get hurt on the next big pullback. The whole charge is being led by Bitcoin. Just understanding that should just allow us to recognise where we are. But the alts that I talked about at the weekend, the shitcoin alts, those were educated guesses at where a potential bottom was going to be. It worked out pretty well pretty quickly, but I'm not going to kid myself into thinking that it's not going to be horrendous, volatile, and maybe even go down lower than those entry points. I mean, some of them have gone up pretty well in a very short period of time. I've took profit a little bit on only one of them. The rest of them I'm not going to get too clever on, you know. I'm just going to accept that Bitcoin's leading the charge, and I hope that I caught the bottom on those altcoins. If it goes down, I'll reinvest the profit that was taken yesterday, and then hope for the best once again. But I'm not under any illusion that it's Bitcoin is doing all of this, and altcoins are effectively like an afterthought. And the reason they're able to moon so hard is usually to do with thin order books and being basically filled up to the brim with everybody going crazy on them. The alt season, in my opinion, it isn't particularly ripe right now. But it will be somewhere along down the lines. Any altcoins that moon or move up right now, you just give credit to Bitcoin. It's one of those kind of moves. I wouldn't really call that an alt season. A major alt season is when there's a rotation out of Bitcoin into altcoins, and as Bitcoin is, you know, toying with the idea of going higher and over a little bit more time, much higher, alt seasons will likely be postponed until further notice. You'll know when an alt season comes to play because Bitcoin goes static and altcoins do hundreds of percent. I'm not really looking at that right now, but those buys that I did at the weekend, I expect them to do hundreds and hundreds of percent, but not immediately, just not immediately, alright? Which is why I'm not particularly looking to get clever on them. I think my entry points are quite good, but that remains to be seen. So, long story short, Bitcoin can obviously go higher right now, and we should expect it to go higher as much as we expect it to go lower. The open interest at this particular level is a bit of a red herring. I don't look at it on a horizontal basis. I would look at it on, how high has it gone when sentiment gets interesting, and it can get a bit higher than where it is right now, allowing us quite easily to push up to the 52,000, and then God knows where beyond that. If we start to get a money flow index read of over 94 for Bitcoin, I would say maybe even 93, but certainly to 95, I would say we're looking, literally at a correction, pretty soon. But are we looking at a collapse back down to its previous lows? Unlikely, but we could, but it's unlikely with the setups that we've got right now on the daily, weekly and everything else. looking pretty good. So hopium for you there, looking for further upside. Is just as likely as further downside, but I personally think that it has every chance to move up to 52 before that big correction. Like I say, there's no bearish divergence across the board. The longs and the shorts are basically 50-50. Somebody's going to get wrecked, and with that will create another big move, and that could easily be to the up. Just be careful with altcoins, that's all I'm saying. But you trade how you prefer to trade. You know, don't let me persuade you either way. I'm just letting you know how I'm viewing this, which is that, you know, despite going up so high and despite having a money flow index so high on Bitcoin, there's more to it, a little bit more to it, which is that open interest, which could push it even higher. And if only we had information that dates back into 2019, we'd be able to give it a lot more. We'll be able to give it, I suppose, a bit more relevance to what's going on right now, which does feel as though it's that kind of vibe in the market right now. Right, I'm going to leave with you there, guys. Thanks for watching. Hope you have a nice day. Take it easy.